It's time to get on the property ladder, but you don't know where to start. Does it feel like everyone's telling you something different? Well, I'm a qualified mortgage advisor and I've helped countless of first-time buyers secure the keys to their first home time and time again. And by the end of this video, I'll introduce you to my smart home buying system, a simple approach that has helped hundreds of first-time buyers get off to the right start on their journey to home ownership. It starts with saving for extras. Let me tell you about Dan and Jess, a couple of first-time buyers who forgot to budget for the additional costs of buying their home. They overlooked expenses like stamp duty, solicitor fees, surveys, moving costs, potential lender fees. This is a common mistake. Many first-time buyers don't allocate enough or forget these costs entirely. That's why I always tell my clients the best thing you can do is set aside an additional 5 to 10% of the property price to cover these extra expenses. For example, on a £200,000 property, that's an additional £10,000 for all the little things that can add up quickly. Manage your credit. So you've got your savings in order, now it's time to manage your credit, and by that, I mean your credit score. Think of your credit score like your financial CV, curriculum vitae. Are you the great candidate for the mortgage? Take Adam, for example. He was a first-time buyer who ticked all the right boxes. He paid his bills on time, he kept his credit card utilization below 70%, and his debt-to-income ratio was in excellent shape. But even with a strong credit profile, it's important to double check your credit report for incorrect or outdated addresses, missing information like being on the electoral roll, any missed payments that might raise red flags for lenders. To make it easy, I always recommend using Check My File, link below. It gives you a clear, detailed report across all three major credit reference agencies, Experian, Equifax, TransUnion, so you can fix any of these issues before applying. Now that you've managed your credit, it's time to move on to A, assess affordability. This is the part that first-time buyers find the most confusing. Let me explain. Let's say I've got two first-time buyers, Alex and Dave. Alex is earning a solid salary of £50,000, but her maximum borrowing has been capped to £110,000. Meanwhile, Dave, earning £35,000, was able to borrow up to £140,000. Why could Dave borrow more, even though he earned a lot less than Alex? Now, this all comes down to affordability. Lenders don't just look at your salary, they dig into your spending habits, existing debts, and even small things like subscription or even your childcare costs. They want to know how much disposable income you'll have after all these expenses to comfortably afford your mortgage payments. In Alex's case, her regular expenditure and financial commitments were significantly higher than Dave's, reducing the amount she could borrow. Now, I get it if that was a bit confusing, but this is where a mortgage broker can help make your life much easier. They'll calculate your affordability based on your unique situation and help you understand exactly what you can borrow without overstretching your finances and match you with the right lender to maximize your chances of approval. Now, are you ready for the next tip? This step is crucial because not all mortgage deals are created equal. Take Jake, for example. Jake went to his bank to apply for a mortgage, but he was rejected. Frustrated, he tried the bank next door, and he was approved, but at a much higher interest rate than he expected. Overwhelmed by the stress of it all, Jake decided to stick with the higher rate rather than shop around further. Here's the thing, if Jake had gone to a third bank on the other side of town, he could have been approved for a better rate. Win-win. But Jake didn't want to do this, and it's for a few reasons. Multiple applications could have hurt his credit score. He didn't have the time to go to the other banks, and the mounting stress made the whole process feel impossible. Now, if Jake would have used a mortgage broker with a right first-time approach, it would have been a completely different story. You see, brokers are research warriors and work with multiple lenders to find the best deal, reducing the need for multiple applications. We know each lender's criteria, ensuring that your application is right first time. We do all the hard work for you, finding the best rate available and reducing the risk of rejection. Even if you're tempted to shop around yourself, the smart thing would be to use a mortgage broker to make the process easier, faster, and less stressful. Which brings me to my final tip. T, team up with experts. Buying your first home is one of the biggest financial decisions you'll ever make, and teaming up with the right expert can make all the difference. Take Lucy, for example. She was determined to handle everything herself, taking advice from her parents, who nagged on about how one-time interest rates were 15% for them and that she should get an endowment mortgage. Her colleagues, who got their mortgage years ago, bragged about getting a 1.2% interest rate and told her to demand the same. Then there were their friends who had completely different financial situations, but still had plenty of opinions. With all this conflicting advice, Lucy felt more confused than ever. She became overwhelmed by the sheer number of lenders and missed out on 3 opportunities for better deals. Finally, she decided to consult a mortgage broker. I explained that endowments haven't been a thing since the 90s and that 1% interest rates are long gone, especially for now. Together, we walked through her financial situation and found her an affordable mortgage plan and simplified the entire process. Lucy said that it felt like the stress just melted away. See, your mortgage journey will be unique to your financial situation, and mortgage brokers work with dozens of lenders, including ones that you won't find online. We have to stay up to date with the latest lending criteria and match you with the right detail. A good broker should always simplify the process, saving you time, stress, and hours of paperwork. But what if you have major concerns with your credit file? What if you've been rejected in the past? What do you do next? Well, I hear you. And that's why I urge you to subscribe and watch this next video where I break down all the things that my clients have done to improve their credit scores in record time.